right. Wow. That was a pretty cool intro. My name is Gregg Schoenberg. I'm the managing partner at Wescott Capital. I am here with my old friend, Jason Brown from Tally. Jason, it is great to see you again.
Great to see you as well. Wish it was in person, though.
I know. Hopefully we'll be able to get back to that in the future. To level set and to make sure that everybody who is watching here understands what Tally does, I'm going to ask you a leadoff question. Let's assume in a post-COVID world, you're in a tall skyscraper, you get into the elevator, and the other person in the elevator with you is Warren Buffett. You make small chat with, have some small talk with him, and he says, "So what does your company do, young man? You've got 60 seconds. What do you tell Mr. Buffett?"
60 seconds. Well, first, Warren doesn't really like tech all that much, so it'd be I might have to give a different angle for him. But all things aside, I would say, Tally, we're a consumer fintech, and we're automating people's financial lives. We started by building the first fully automated debt manager to help people tackle the $1 trillion debt problem, credit card debt problem in America. And our ultimate goal is to automate all aspects of people's financial lives so that we can put more money back in their pocket and give them peace of mind. And from our standpoint, we're very much a mission-driven company, and our mission is to make people less stressed first and better off financially. And what's interesting is the majority of people with credit card debt actually have clinical levels of anxiety. And so we hear customers talk about the Tally experience is taking weight off of their shoulders and allowing them to sleep at night. So we're working to make people's kind of emotional state better. And then we also help them pay debt down faster. So we see people paying debt down twice as fast as they would otherwise. And to date, we've saved people millions of dollars of interest and late fees.
And so could you just give a little bit more detail on how you go about doing this? What is the value proposition for your customers?
Well, so it's a fully automated debt manager. And what that means is that a customer downloads Tally, they pass a quick soft credit check, and then Tally actually takes responsibility for paying your credit cards for you. You still get to use your cards, you get the points and rewards, but Tally is actually making sure that all your cards are getting paid. It automatically saves you money on interest if you're going to be charged interest by the credit card companies. And then we have a built-in, it's like a Robo-Advisor for debt, where it figures out how much you should pay every single month to get out of debt as quickly as you possibly can. So it's really like, if you hired an accountant to manage all your credit cards for you and they did everything, it's basically what we built into software.
And so the software is looking at the interest rates that your customers are paying on the various cards they have, the credit limits. What are some of the other factors, just to give people a sense of how Tally goes about choosing which card to pay off in which order?
Yeah, well, to put some context, so the average American has 4 credit cards. And 86% of Americans pay their cards manually, meaning they either log in once a month to pay, or they pay it through like envelope and such. So that means they've got 48 due dates per year that they're juggling, and that leads to $13 billion of credit card late fees. So it's a big problem. So with Tally, it's first off looking obviously APR utilization, and then people often will have some portion of their balance that are on promotional rates or zero APR balance transfers and such. And so it's looking at all of that to maximize the interest savings that we can give to customers. And then most importantly is it's looking actually at your cash flow and your upcoming expenses and helping you figure out how much you can pay and what the right amount is to pay. So the way that credit cards work is they try to get you to pay as little as possible. That's why if you look at a paper statement or if you go online, the thing that's like biggest and most focused is minimum payment. They're trying to anchor you to pay as little as possible because they obviously want you to have an outstanding balance so they can charge you interest. Whereas Tally is figuring out the exact right amount to pay, and you just press one button and it will make sure that you pay the right amount every time based on your cash flow and your expenses.
And what I realize you have many different kinds of customers, but could you just give kind of an overview of the typical profile of a Tally customer?
Yeah, well, our customers range from folks that recently graduated from college all the way actually to parents that just sent their kids off to school. And the thing that's interesting about credit card debt is it's very much a white collar and blue collar problem. It's the $1 trillion of credit card debt. About 70% of that are people with what are called prime FICO scores, or credit scores over 660. So right now we are currently focused on that group of people that have at least 660 FICO score, and generally can pay their bills and manage their debt.
And generally younger people use Tally, would you say?
Yeah, so I think our range is 25 to 35. That's where the bulk of our customers are currently fall into. I think the median is like 32.
Got it. Okay. And later on in our discussion, I want to probe a little bit more as to why you started Tally and connect that to your unique background. But given the fact that we're in a pandemic right now, given the fact that the unemployment rate is very high, given the fact that a lot of people are suffering, I want to just ask you, how are your customers doing? And is there anything that Tally has done to try to help them deal with these unprecedented times?
Yeah. Well, as of now, our users are generally being pretty responsible with their debt, and we've seen payment rates increase, which I could talk about a little bit, but there's certainly a group of people that have been directly negatively impacted because they've lost their jobs or they've had some kind of an income reduction. And for us, we've seen about 15% of our total users have some kind of negative outcome due to COVID. And so we rolled out in March a COVID relief program. And basically what that is anybody that has been negatively impacted, we'll actually work with them to help either let them skip some payments until they can get a job and start getting some income, or reduce their payments and just generally create some kind of a plan to allow them to be successful in getting back on track. And in exchanges, we're not negatively reporting to the bureau or negatively impacting their account. We're just trying to effectively help them pick up where they left off once they get back on their feet. But the other 85% of folks that we have who have not been negatively impacted, we've actually seen a pretty substantial reduction in total spending. They're not going out to eat as much. They're not traveling as much. They're not spending as much on, let's say, gas and commuting. And we've seen the overarching majority of them are actually investing that extra cash that they have into their credit card debt. So Tally is really urging them to take that free cash flow that they have and invest it into their debt. And if you have credit card debt, literally it's the #1 investment you can make in your life. So we've been really encouraged to see that kind of behavior.
And when you say negative impacting, how do you know if one of your customers has been negatively impacted? And what defines the universe of a negative impact?
Yeah, well, one of the things that's pretty special about Tally is, again, it's like this Robo-Advisor for debt, where it's like helping you figure out how much of your cash flow you can invest in paying down your debt, right? Because we're monitoring the cash in your checking account and your salary or whatever your paycheck coming in. So we define negatively impacted as somebody who has had a reduction in income or their income has been eliminated entirely. So it's about 15% of our total users have had some kind of a negative impact, and about half of those, so about 6%, have had like true income has gone to zero except for government programs and unemployment insurance. So that's what we mean when we talk about that.
And so the fact that you're not reporting to the bureaus when you know about a negative impact, does that create a value proposition for people who are like, oh my goodness, like I should use Tally because I get a little bit of cover from them?
No, so it's important to understand that there was actual, and this is a little technical, but there was an interagency agreement in, I think it was late March or early April, where the FDIC, the CFPB, and the FTC and some other government alphabet soup came out with a joint recommendation. It was a strong recommendation that all banks and financial institutions give people this grace period if they were negatively impacted by COVID. And one of the things is for new people signing up is they have to certify that they haven't been negatively impacted, because we don't, obviously want to bring people on board that are like, have lost their jobs. So we are certainly making sure that that new people joining the Tally platform are able to pay and able to handle their debt. But for those that were on our using Tally beforehand, we're working with them. One of the other things that we originally did when we built our very first credit policy about 5 years ago was we built it off of data from the last recession. So we don't propose to be able to predict when recessions will happen or what will cause them, but we do believe that they happen, every 7 to 10 years. It seems pretty consistent. So our original underwriting and risk model had factored in a shock like this, and we were at least happy to see that it performed well and has performed well in this current shock, even though it's obviously quite a bit different from the Great.
Okay, so you're referring to your core underwriting model that you use to determine who you're going to extend credit to.
That's correct.
Yeah. That's going well. Okay, I want to probe a little bit on Tally, the company, and then talk about what you see as sort of changing in the world of fintech after COVID. Let me just ask you, a lot of startups, they've heard from their VCs, the cost of capital has gone up, right? Obviously, watch your money, don't spend like crazy, all those things that I'm sure, we've both heard a lot. What has Tally's posture been? Is it going on offense? Is it playing defense? Or how have you managed the company through this period?
Well, I mean, obviously, this is a really difficult period for the country, and there's I guess at the end of the day, like there's a lot of suffering and hardship going on. The thing that I guess it has created is an opportunity for us to be really focused, and we are investing more in product and engineering. So it has really had us completely focused, and we've actually had some of the most productive months in the company's history over the last 5 months, because we've been really laser focused on what matters, which is we want to be able to give universal access to Tally. As I mentioned before, you have to have a 660 FICO score in order to have Tally help you manage your credit card debt. But we want to be able to universally help everybody. And we've been investing in actually improving and expanding the product so that we can help even more people. So for us, this has been a great opportunity to go on strong offense and really focus on what we do best, which is building product and technology.
Gotcha. And I take it it's probably not the right time to kind of roll out new features, right?
No, it's actually it's a great time. I mean, it's for, I think, a lot of, maybe to generalize, a lot in fintech, the customers using financial services who were, let's say, not fully adopting all online, or maybe didn't have a relationship with as many fintechs, like that's changing very fast. So it's actually, there's never been a better time to roll out new features and try new things. So we really accelerated the pace of testing new features.
Gotcha. Okay. All right. Well, let's talk about what happens when we're on the other side of this unprecedented period. If you could put your fortune teller hat on for a minute here, Jason, what will be different in fintech? What will be different in consumer credit? What will be different in how Tally runs its business?
Well, I think one of so this is a prediction, and I hope I'm right on this, but as we talked about earlier, our core target is 25 to 35, and I think that's the age of people who are really looking for technology to make their lives better. Whereas let's say the Gen X and some of the boomers have been less quick to adopt the cutting edge of technology, which financial automation is certainly new in the last couple of years. And my prediction is that those Gen X and some of those boomers have almost with this pandemic been forced to fully embrace online finance, and are seeing that hey, logging into their banks and financial institutions to give access to fintechs to be able to do work for them and to make their lives better is not so scary, and it's actually really enhancing their lives. So I actually think that we're going to see the market for fintech in general, and this will trickle down to Tally. It's just a lot more people are going to be wanting help with their financial lives by leaning on technology, and it'll actually accelerate the adoption much faster than we had seen before.
And open banking, better use of data. Talk to me a little bit more about that.
Well, this is a hot button here. I mean, maybe just a little background on open banking. So I think the fight really comes down to the fact that banks think that they own your data. They think it's their property, whereas consumer advocates and folks like Tally believe that consumers own their data. And if Congress wanted to, they could enforce a clause in Dodd-Frank which forces banks to provide all of a customer's data in machine-readable standardized formats. It's something that the European Union has done, but Congress has yet to enforce that. So it's been kind of up to banks to decide how they're going to make this happen. And it's actually very similar to in the 1990s, cell phone companies thought that they owned your phone number. So if you wanted to switch providers, you couldn't take your phone number with you. And the regulators knew that that actually stifles competition because it prevents people from moving from one, let's say from Sprint to Verizon. So they intervened, and in 2000, they forced number porting so that you can take your number with you, and immediately cell phone plans dropped by 10 to 15% in total monthly cost. So open banking, meaning that a customer can have access to all their data from all their financial institutions in a standardized format that they can provision to whoever they want, that will make consumers much better off and will move literally hundreds of billions of dollars of current profit that's held with traditional financial institutions and move that to consumers. So that is playing out right now. And if you want a little inside baseball, so there's these things called data aggregators. So there's, Finicity, Plaid, Yodlee, these companies that have basically made it their business to be this data intermediary between the financial institutions themselves and all of the services that want to use their data. Now, Chase just announced last week that all Chase accounts will be unlinked for the whole United States. So over the next 6 weeks, any Chase accounts will be delinked, and every single one of us is going to have to go back in and relink our Chase accounts across, I'd say folks in this audience probably have 5 or 10 relationships where they have Chase accounts linked. And
they're going to have to explicitly,
they're going to have to relink. They're going to have to put in their username and password again. So all the folks here over the next 6 weeks, you're going to just see all these are called user action requests, where you're going to have to relink. And that was with no notice. So that was like, hey guys, this is going to happen next week, and we're just going to delink 100 million accounts. And then you have to go again. They're going to do it again in 2021. So because they're switching to something called OAuth. So again, at the end of the day, the cat's out of the bag. This is the future. I don't think we can turn back, but it's just done in a way that's not all that user friendly, and it creates a lot of friction for consumers. And so I think that obviously banks understand this, and so they're not all that incentivized to make it a great experience for consumers, because it's not ideal for them.
Does this become a problem for Tally because all of your customers are going to have to recertify that they want their bank to share their information with you?
Yeah, I mean, it's extra work that all consumers for all fintech apps, and even not just fintech. I mean, there's some credit bureaus that are actually working with data providers. I don't know if you've heard, you can now get your FICO score boosted overnight by provisioning your account, and then things like payments to cell phone and rent will actually get posted on your credit bureau, so it can give you an improvement in your credit score. So this isn't just fintechs who are using this. So any third party that is that has the customer's already provisioned to allow to have access, they're going to have to relink across all of it. So the folks in this audience, you're going to be doing that a lot over the next 6 weeks.
And how much advance notice did you have to prepare for this? I would
imagine. So from what my understanding, Plaid, who's got acquired by Visa, so Plaid's one of these intermediaries, that they had less than a couple days notice. They said, hey, it's gonna happen next week, and I think they give all their customers a notice within a day of finding that out. So they're obviously having more advance notice is better, because you can prepare your customers, let them know it's coming. But it's just one of those things where ultimately it's going to be fine. But it's just like a small inside baseball example of how it's not the smoothest process once you get on the inside of it.
I think you're putting it kindly there. Okay, we have about 10 minutes left. If anybody does have a question for Jason, please put it in the chat, and we will make sure to ask Jason those questions. Jason, I want to go back for a minute. You come off as sort of the typical confident, CEO of a fast rising startup, great venture backers, really phenomenal traction. But the first time we sat down in a public forum together, I learned a little bit more about your background. And I'm going to ask you just to give 2 quick minutes on it, because I think it's relevant to what Tally is. So I want to just draw this connection. What is your background? And why did you start Tally in part as a result of that background?
Well, so my childhood, I was fortunate. I had just so much love in our household, but we weren't really strong on the financial front. We always really struggled in that department. And my mom is she's one of my heroes, because she's just one of the hardest working, most disciplined and intelligent people. And believe it or not, my mom actually homeschooled my brother and I for a good portion of our education. And I really credit her to giving me a foundation that's allowed my brother and I both to, graduate from good schools, and, at least for me, be able to build a company. And just seeing the financial stress that her and we had to deal with really is very sad to me, because I don't think it's necessary. Because if my mom would have had the kind of, like, quite honestly, financial automation that ultra wealthy have, they have, family offices in Connecticut and New York that really like outsource and manage their entire financial lives. Like, if my mom had had that, she wouldn't have been rich, but she would have had a little nest egg. Maybe she would eventually have been able to own a house, but she just never had that kind of access. And so seeing that is the thing that makes me so passionate about bringing full financial automation to everybody. Because if we can take away the cognitive load and the functional load off of managing our financial lives and put it onto effectively the shoulders of software, well, it's I believe the best way to universally make people less stressed and better off financially. So it's something that is very close to me, and especially seeing a financial crisis like this, at least in the lives of millions of Americans, it's so important to have that cash buffer and to have the ability to last 6 months if you lose your job. And those are the kind of things that, if people did have financial automation in their lives, they would be a lot better off than they are today.
But just so I understand, and people watching this understand, I don't know if you were ever below the poverty line, but you certainly weren't that far above the poverty line. Is that right?
Yeah. So I mean, so my mom had envelopes, and it was all cash based. And when the grocery envelope was empty, I mean, that's all we had for that week. And there's many times where we got to the place where the envelopes were empty, and we had friends that would help us out, or my mom would somehow scrimp and make by. So we were definitely in a tenuous position many times. And the crazy thing is, my mom and homeschooling us, like, it wasn't like my mom didn't understand math and money. When I was just catching up with my mom a couple months ago, and she actually showed me this book. I can't believe she's kept this. It was actually her lesson plan study. And one of the homework assignments she gave me was I had to go through our phone bill line by line and dissect every single charge, cost per minute for that location, that time of day. And I had to do this whole report on the phone bill. So she was trying to give me what she understood. She's trying to give me these nuggets of things of, how to manage expenses and such. But the bigger picture of, trying to build up a nest egg, protect for the future, health insurance, these kind of things of what do you do if something bad happens? That really wasn't in even the realm of thinking for her. So it's something where if people did have financial automation, first off, financial institutions wouldn't make as much money off of them, because there'd be an intelligent entity that's advocating for them. And secondly, it would help make sure that they're in a much better position to be stable. So
fair to say that the sort of the spark for the idea of Tally was born all of these years ago, when you were doing something which, of course, could be automated today, but at the time couldn't be automated, right? Is it fair to say that you can draw a direct line between your upbringing and what Tally?
100%. I mean, one of the books that I was obsessed with when I was either 14 or 15 was The Millionaire Next Door, and it was breaking down, how to manage your money and how to make sure you don't end up in a bunch of debt in a bad spot. So it's always been something that I've been really passionate about. It wasn't until a couple of years ago when I realized that the big theme over the next decade is going to be the role that automation plays in shaping our experiences. And so there's finally, the technology is in a place where we can actually build a software-based system that can do most of the thinking and work in people's financial lives. So it's kind of like the mission finally met the opportunity to build technology to solve it.
Okay, well, I want to conclude on sort of a big picture question that, I realize you're running a company day in, day out, but I just have to ask it to you anyway. Look, I love the fintech space. I think fintech and the power of software, really can do a lot to help people improve their lot in lives. I sometimes worry a little bit that people believe that all we need to do is throw software at any problem and everything else can stay the same. And, all of our country's financial problems will be solved. All of the problems for younger people in particular will be solved. But the reality is, as you know this probably better than I do, Jason, the millennials and the Gen Zers are poised to be the first generation in history that will not do as well as the previous generations before them. And so with that as a sort of lead in here, I will ask you, if whoever our next president is were to tap you, Jason Brown, to be his advisor on some changes to make to improve the economic lives of younger people, apart from you and many other companies out there building great software, what would you tell the president that could be done to enhance the economic lives for people who you serve every day?
Well, I think we got to grow the pie. We got to grow GDP. And I think the best way to do that is actually make post-high school education free. So, and I'm not talking about just college. Like, I was just reading a report yesterday. There's a huge shortage of welders in this country. There's a huge shortage of HVAC workers. I think that what is it that's magical about, elementary school is provided for everybody, middle school is provided for everybody, high school, but suddenly it just drops off a cliff. There's nothing like special about that other than that's the way it was. It should be that if you want to go the college route, there is always a free and reasonably high quality way for you to get educated without going into debt and taking out a bunch of loans. And if you want to get into a trade and get directly into the workforce, the government should provide that ability. And I think separate from that is we should consider a way to allow all the folks with student loan debt a way to get true forbearance and forgiveness of their student loans, because especially millennials are so weighed down with student loan debt that it really prevents them from being able to, let's say, buy homes and fully participate in our economy. So I think we could get a very high return in growing GDP, growing the total pie, if we were able to solve the education problem post high school.
Do you think if student loan debt were somehow addressed systematically, younger people would use their credit cards more or less or differently?
Well, if there was no other education or they weren't using Tally, I think we would see a certain percentage of them would end up getting these awesome offers from credit card companies, and those credit card companies would end up providing them an experience that would probably get them in some trouble. So I don't think that would be the best possible option, but not everybody, and hopefully they'll all sign up for Tallys so that they don't let that happen.
Okay, well, one person from your audience said it's very motivating to hear your story, and they thank you for sharing your personal journey. Jason, your personal journey has been motivating for me. I think Tally is a fantastic company. I think you're a great CEO. So I would like to thank you for spending a little bit of time with me here today. And I guess people can look up Tally and find a way to get to you either through the app or whatever if they want to learn more, right?
That's right. Thanks, Greg. I really appreciated the time, and wish you all the best.
All righty. Take care.
Bye.
Bye-bye.
Gee, thanks, Jason and Greg. Jason, that was a very inspiring story. And again, I thank you for telling it as well. Just to wrap up today's artificial intelligence and machine learning session, I'd just like to, kind of give a theme or a couple of themes that I've heard across the talks today. All of the themes that we talked about today seem really to lend themselves to the humanization of artificial intelligence and machine learning in finance, and making sure that people accept what those algorithms are telling them and are actually helped by them. So whether it's humanizing the way that artificial intelligence interacts with human beings through chatbots, through voice integration, making it more natural to talk to the machine, or whether it's integrating many data sources and providing data scientists trusted information to make decisions on and make algorithms on, so people have a deep trust in those algorithms, or whether it's really humanizing the use cases that we apply artificial intelligence and machine learning to, like the credit card payment application at Tally that Jason was just telling us about. The future of artificial intelligence and machine learning is really that human-machine interface. How do we ensure that all of our basic needs as human beings, when we make a decision or when we provide or give trust to something, are validated by the way that we build AI and ML into our fintech companies and into our applications? So I hope that all of these talks were useful for you today. I know it's broadened my mind about how artificial intelligence and machine learning can be used across the industry, and given me a couple of great ideas on how to enhance the MicroStrategy product set as well, and our integration to artificial intelligence and machine learning to better benefit our clients. So again, I'd like to thank all of the speakers. I'd like to thank you for your time in this track today. And again, thank you and have a great day.